If you're an American and planning to retire anytime soon, we've got some news for you. In what can be called a major investment shakeup, US President Donald Trump has signed an executive order enabling access to alternative assets for millions of Americans who invest in 401k and other defined contribution retirement plans. What kind, you ask? Well, Trump's order basically opens up avenues for including private equity, real estate, cryptocurrencies, and other alternative assets in workplace retirement plans, thus marking a sweeping shift that could unlock access to the roughly $12 trillion defined contribution retirement market. And until now, most plans held familiar assets, stocks, bonds, cash-like investments. But via this executive order, Trump instructed the Labor Department to revise guidance for money and property managers and regulations, thus paving the way for alternative investments to enter retirement portfolios. This is being touted as a major shift from the previous policies, which handed such access privilege primarily to the wealthy and government workers and investors. And by far, possibly the biggest move by the Trump administration to bring private assets to defined contribution accounts, and also reportedly in a bid to provide increased retirement security. Important to note here, this also comes amid the Trump administration's push to embed in crypto in the American economy quickly and broadly. From taxes to mortgages to retirement planning, Donald Trump wants to cover as many bases as possible. And experts are saying a move like this opens up the doors of more investment options to Americans who previously felt limited with less versatile options to choose from. Just for context here, Americans have trillions invested in employer-sponsored plans. The move could open up $12 trillion in defined contribution plans, including roughly $9 trillion in retirement investment for private asset managers. And this sparked some quick moves already, with firms like BlackRock planning to launch a retirement fund next year with a 5 to 20% allocation to private equity and private credit. Another inviting factor is the potentially higher long-term returns such investments might attract on a frequent basis. While many are touting this to be a golden opportunity for Americans to do more with their hard-earned money and life savings, experts are cautioning that this might come with its own set of challenges, as some of these alternative assets are hard to be converted into cash, plus they are costly, which with fees like 2% management plus 20% of profits. They also lack transparency and bear high litigation risk, especially for long-term retirement savers.